makes drones. So we see our weekly chart, we see a very, very good big uptrend, right? So we see it breaks out of this long-term base. Whenever stocks break out of a long-term base like this is when investors can get in. These are very long-term traders because you have to know where the stock is in its price action. Do you want to be an investor or do you want to just swing and hold it for a while? For these very volatile stocks, it's not very good to be an investor because they can have very huge dips of maybe 50% correction. So normally they're just good for swing trading. But if you're one of those people that has diamond hands and you're willing to hold this thing on this very big breakout with volume, this is a very clear reversal pattern where you know the stock is going through some major accumulation. The thing has gone up almost 1,000%. So that means whatever money you invested multiplied times 10. If you put in 10,000, you would have picked out 100,000 from the stock. Of course, it's easier said than done because of all of those swings, but that is just the case. So last year, let's see what the thing did. From the big breakout, we can see it did about 900%. And that is something we expect because this is something we call base one. And after this, we can expect maybe just one or two more bases, right? So this is base one. You want to know the stage analysis of your stock. So these very long big bases are what we call initial bases. And from such big bases, stocks can run like this for a very long time. So this is what I would call base one. This is base two over here. Then this is base three. So the best times to buy are base one and base two. Base three is always a swing trading opportunity because it cannot be fully trusted. The stock has already gone up a lot. So what we are doing here is just like what you could have done in the past. So you see this cheat here, comes down, forms a nice consolidation. This was in base one. You can see it's at least 10 bars, right? So what do you do there? As soon as it breaks out of the chit, put the stop right below the price structure break. You don't want to be having random stops. I used to have random stops, but I realized that they don't work so well. So risk about 12%. The maximum profit you could have made on this particular swing trade, let's say you're waiting for it to close another 20 days simple moving average, was about 13. 13 times your risk. So if you risk $1,000, you're making $13,000 from this trade. If you risk $100, you make $1,300, which I think is a very, very, very big return. So then it comes, sits down for a while, does the same stuff like I told you. You're looking for one of two things. We're either looking for a checkout, because we have a horizontal line here. We like to see these checkouts. They're good signs. These first two checkouts, they wouldn't be trustworthy because, as you can see, the stock has not made a very, very good base yet. This one, of course, just don't get in because it was just consolidated for just about maybe 4 weeks. It's not very ripe after such a very big move. Stocks, once they make these big moves, they want to sit down for a while, right? So you have to wait for them. So let's say you got in on this first checkout. You can start building your positions like this.